Imagine sending money halfway across the world in under 3 seconds. No banks holding your cash hostage, no hidden fees, no waiting days for it to arrive. Now picture the vast machinery of global finance, powered for decades by the slow, cumbersome SWIFT system, suddenly disrupted by a digital upstart called XRP. Could a cryptocurrency truly replace the backbone of international payments? Is Ripple, the company behind XRP, poised to challenge trillions of dollars in legacy financial flows? Welcome to the seismic battle reshaping the very core of how money moves across borders. Just a decade ago, cross-border payments were a headache even for the world's largest corporations. Every year, armies of accountants and treasurers would battle paperwork, compliance checks, and layer upon layer of intermediaries. The toll, delays, uncertainty, and hundreds of billions wasted in fees. For individuals, sending money to family abroad could mean hard-earned wages evaporating in the hands of middlemen. At the heart of this archaic process sits the SWIFT network. SWIFT, the Society for Worldwide Interbank Financial Telecommunication, carries more than $150 trillion in payments annually, connecting over 11,000 banks in 200-plus countries. For decades, its secure messaging system has been the glue holding together our global financial plumbing. Yet, in an age of instant messaging and digital everything, SWIFT's underlying process can seem almost medieval. Banks send payment orders that bounce between institutions, often taking days to clear and settle. Enter Ripple and XRP. Founded in 2012, Ripple set out to use blockchain technology to solve this century-old problem. Their vision: instant, cheap, and transparent global payments. Instead of relying on slow, trust-based chains of banks, Ripple created a network running on the XRP ledger, a blockchain that's both permissioned and publicly shared. In Ripple CEO Brad Garlinghouse's words, XRP delivers a compelling substitute to SWIFT, promising swifter and more economical cross-border transactions. But what does that actually mean, and why does it matter? Let's break down the basics. Blockchains at their core are ledgers, records of who owns what. But not all blockchains are created equal. The infographic shared recently by renowned crypto researcher SMQKE puts XRP in a unique class, a permissioned, publicly shared ledger. What does that mean? Essentially, anyone can see and use the ledger, but only selected, trusted validators can maintain it. This approach combines the transparency of open systems with the assurance and performance traditional institutions crave. Unlike Bitcoin, where anyone can mine or validate transactions, Ripple selects a group of trusted validators, many of them major financial players. This allows for lightning-fast confirmation times and scalability. And crucially, because no single entity, not even Ripple itself, has unilateral control, the network is still considered decentralized, an important feature for legal and technical credibility. Think of Ripple's payment system as the world's fastest, most transparent digital courier. When a payment is initiated, it's zipped across the XRP ledger, with settlement occurring in seconds. This isn't just theory. In Q1 2025 alone, Ripple's on-demand liquidity (ODL) service handled $15 billion in transactions, up 35% from the previous year. Why are so many institutions starting to take notice? For banks and payment providers, using XRP as a bridge currency means they can exchange one fiat currency for another without needing to maintain expensive pre-funded accounts around the globe. This frees up capital, cuts risk, and, here's the kicker, saves a fortune on fees. Jane McAvoy from BVNK puts it succinctly: we're teaming up with WorldPay to enable near-instant payouts to 180-plus countries. Suddenly, the dream of instant global remittances, corporate treasury efficiency, and seamless international trade settlement is on the table. The numbers are staggering. As of June 2025, XRP has a circulating supply of 55.6 billion tokens and a market capitalization exceeding $22 billion. Strategic partnerships, like the one forged with Tranglo in Southeast Asia, are supercharging Ripple's reach. In fact, a recent survey suggests that by 2026, up to 60% of financial institutions are considering integrating XRP into their payment architectures. That's not just hype, that's a genuine paradigm shift in motion. Let's not forget, Ripple isn't standing still. In 2025, it acquired Fortress blockchain technologies to reinforce its regulatory compliance toolkit, addressing one of the thorniest challenges facing crypto adoption. Ripple has also funneled $5 million into the XRP Ledger Foundation to kickstart DeFi applications, opening a new frontier of blockchain-based lending, borrowing, and trading. And with native smart contracts now live on the XRP ledger, the protocol is stepping directly into territory traditionally dominated by Ethereum. But can Ripple truly dethrone Swift, or is this just another overhyped tech story? To answer that, we need to look at the deeper realities, regulatory, technical, and competitive, that define the world of global payments. The first challenge is regulation. For all its promise, crypto has faced a barrage of scrutiny from governments worldwide. Ripple has found itself squarely in the legal crosshairs, with high-profile lawsuits threatening to derail its momentum. The need for robust compliance isn't just a checkbox, it's table stakes for playing on the global stage. Brad Garlinghouse admits the stakes. If you want to move trillions, you need to build the infrastructure and relationships to satisfy banks, regulators, and corporations. We're committed to that journey. Yet Ripple has made bold moves to address these hurdles. With Fortress blockchain technologies under its wing, Ripple is signaling its commitment to financial transparency and compliance. It's also actively courting central banks, piloting a CBDC, central bank digital currency platform, with 5 nations. Imagine the XRP ledger forming the backbone of digital dollar, euro, or yen payments. Some experts see that as a very real possibility. Still, not everyone is convinced. Kristalina Georgieva of the IMF warns, blockchain technologies, exemplified by Ripple, harbor the capacity to augment financial inclusivity and efficiency, albeit necessitating meticulous regulatory oversight. In other words, innovation is exciting, but guardrails are essential. Compounding the challenge is fierce competition. Ripple isn't the only game in town. Stablecoins, cryptocurrencies pegged to traditional currencies like the US dollar, are booming. According to Visa on-chain analytics, stablecoin payments hit $5.7 trillion last year alone. Partnerships are cropping up across the ecosystem. WorldPay joined with BVNK to enable enterprise-grade stablecoin payouts to 180-plus countries, bypassing SWIFT entirely in some use cases. Other blockchains like Stellar, Solana, and Ethereum are also eyeing the global payments prize, each touting their own blend of speed, security, and compliance. And of course, SWIFT itself isn't sitting idle. The old giant is rolling out upgrades and experimenting with blockchain integrations of its own. Then there's the specter of volatility. XRP, for all its utility, is still a cryptocurrency, and cryptocurrencies are famously volatile. For banks and corporations, that raises serious questions about risk and stability. Can a volatile asset like XRP really serve as the oil in the machine of global commerce? Yet institutional adoption is quietly accelerating. David Schwartz, Ripple's CTO, explains, "The XRP ledger is meticulously architected for institutional deployment, furnishing the scalability and security requisites for global finance. For every regulatory battle, there's a new partnership, another country testing Ripple's rails, a new DeFi protocol springing to life on the XRP ledger." But the story isn't just about technology and compliance. At its core, this is a fight for power, over who controls the flow of global money in the digital age. Will Ripple and XRP, with their blend of blockchain audacity and institutional discipline, be the ones to finally crack open the closed club of international payments? Or will old habits, new regulations, and fierce competition keep the gates firmly shut? As we've seen, Ripple's rise is fueled by innovation, strategic alliances, and a hunger for disruption. But looming regulatory risks, technical rivalries, and financial volatility pose real threats. So, as the world stands on the brink of a payment revolution, the crucial question is, can Ripple overcome these hurdles, or will it be just another casualty in the war for the future of money? And if Ripple does succeed, what could that mean for banks, businesses, and the billions of people who move money across borders every single day? The answer just might reshape the global financial order as we know it. Now that we've set the stage, let's look ahead and untangle the extraordinary possibilities and looming risks that surround Ripple and XRP. Because this isn't just about technology or bank partnerships, what's at stake is who will own the rails of global finance in the next decade, and how the money we use every day will cross the world. Let's imagine a near future. It's the year 2028. You, or your business, need to send money halfway across the globe. Today, most people still rely on SWIFT, that half-century-old messaging network, or perhaps a slow-moving wire transfer. Fees, delays, and uncertainty haunt even simple payments. But now, Ripple's solutions are woven into the back end of dozens of major banks, institutions you might have an account with. Their on-demand liquidity service, powered by XRP, allows you to transfer dollars to yen or pesos to euros in seconds. No waiting for daylight hours, no worrying if the destination is on a different continent, and you pay a fraction of the old costs. This vision isn't just marketing. In Q1 of 2025, Ripple's ODL processed $15 billion in transactions, up 35% from the previous year, an incredible surge demonstrating real-world adoption. A survey found 60% of financial institutions are actively considering XRP for their payment architectures, aiming to bring these blazing fast settlements to their customers. The numbers are telling a story. The world's largest money movers are paying attention. But the revolution might not stop at the banking system. Ripple is now piloting central bank digital currency, CBDC platforms with several nations. Imagine a world where not only private banks but sovereign governments process international settlements on blockchain rails. As Ripple CTO David Schwartz puts it, the XRP ledger is meticulously architected for institutional deployment, furnishing the scalability and security requisites for global finance. This could be a world-changing development. If successful, Ripple could provide the backbone for a global web of national digital currencies, each interoperable, each able to instantly settle transactions with their peers. This tackles one of the greatest bottlenecks in international commerce: friction at the border. Could Ripple be to payments what the internet was to communication? But not all scenarios are sunny. Competition is ferocious, and the stakes could not be higher. Stablecoin giants like USDC, USDT, and new blockchain protocols are pursuing the same turf. Just look at the numbers. According to Visa, stablecoin payments volume hit $5.7 trillion in the past year. Meanwhile, powerful payment processors like WorldPay and BVNK are rolling out instant stablecoin payouts to clients in over 180 countries. The old guard, sensing disruption, is not standing still either. Swift itself is rolling out its own blockchain experiments, aiming to leapfrog the upstarts. And then there's the ever-present regulatory cloud. Ripple's history with regulation is complicated, to say the least. The legal battles with the SEC have become the stuff of crypto legend. Ripple has responded not by retreating, but by doubling down on compliance, acquiring fortress blockchain technologies, and investing millions into better regulatory infrastructure. But the risk remains. A single adverse ruling or a sudden change in law, and adoption could stall. As the IMF's Kristalina Georgieva warns, blockchain technologies, exemplified by Ripple, harbor the capacity to augment financial inclusivity and efficiency, albeit necessitating meticulous regulatory oversight. Yet even here, there are signs of hope. By classifying Ripple's technology as a permissioned, publicly shared ledger, independent research and industry experts argue that Ripple found a delicate balance: trustworthy enough for banks, open enough for auditability, and robust enough for compliance requirements. As crypto researcher SMQKE highlighted, Ripple is a global financial transaction system, documented. That's not just hype, it's increasingly reality. So, what does this mean for you? Why should you care whether Ripple or its competitors emerge victorious? First and foremost, the practical benefits of this new payments era could be tangible in your life, whether you realize it or not. If Ripple and similar blockchain systems succeed, fees for international transfers could drop dramatically. Remittances sent home by migrant workers or cross-border e-commerce payments would become faster, cheaper, and more reliable. Today, workers sending money to their families from the US to India or the Philippines sometimes lose 5 to 10% of their hard-earned wages to intermediaries. Ripple's technology slashes that toll. For entrepreneurs and businesses, the impact is even more direct. Managing cash flows across borders, once a logistical headache, becomes almost as simple as sending an email. With near-instant settlement, companies can better manage liquidity, minimize currency risk, and enter new global markets with confidence. The reduction in pre-funded Nostro accounts means banks can free up billions in trapped capital, making banking more efficient at every level. For those interested in the emerging DeFi, decentralized finance world, Ripple is actively investing in making the XRP Ledger a platform for decentralized apps. The XRP Ledger Foundation has put $5 million into DeFi application development and now welcomes native smart contracts, paving the way for lending, borrowing, and new financial services to be built on top of Ripple's rails. If you're a developer or tech-savvy investor, this is a new ecosystem ripe for exploration. But there's a lesson here too for the cautious. Regulatory outcomes are unpredictable. Cryptocurrency volatility remains a real concern. And while XRP's use case is powerful, no outcome in finance is ever certain. As Brad Garlinghouse, Ripple's CEO, likes to say, XRP delivers a compelling substitute to SWIFT, promising swifter and more economical cross-border transactions. But delivering on that promise requires navigating both innovation and compliance with skill. So if you're watching this and wondering whether to invest, participate, or simply observe, consider these tips. 1. Stay informed. This is a rapidly evolving landscape. Major announcements, new partnerships, regulatory wins or losses, and technical upgrades can significantly impact Ripple's trajectory. Follow trusted sources, not just hype. 2. Diversify. Even as XRP wins institutional attention, remember that the future of payments is multi-chain. Stablecoins, Ethereum-based protocols, and CBDCs will all likely play a role. Don't put all your digital eggs in one basket. 3. Assess your risk. The volatility of crypto means fortunes can be made and lost quickly. Invest only what you can afford to lose and take a long-term view. 4. Explore use cases. For tech professionals and entrepreneurs, Ripple's XRPL ecosystem and DeFi initiatives present real opportunities. Whether building apps, offering payment services, or exploring integrations, the growth of the Ripple ecosystem could open doors. And here's a secret fact you won't hear in most headlines. Behind the scenes, Ripple is quietly piloting interoperability for CBDCs in 5 different countries. If these trials succeed, it could position Ripple as the undisputed bridge between national currencies in a digital era, a SWIFT 2.0, but much faster, cheaper, and more transparent. So, can Ripple truly overcome its obstacles and redefine global payments? The answer isn't simple. The old guard is powerful and fighting back. New competitors innovate at a breakneck pace. Regulatory storms could reshape the battlefield overnight. But one thing is clear. Ripple isn't just talking. Billions in transactions, dozens of strategic alliances, and government-level pilots are proof of forward momentum. Will Ripple single-handedly topple SWIFT? Maybe not. But it's already forcing the world's financial titans to adapt, and, in many ways, is steering the future of payments more than any blockchain before it. The rails of global money movement are being torn up and rebuilt in real time, and Ripple is at the heart of that transformation. If you want to be ahead of the curve, keep a close eye on Ripple's next moves. Watch the regulatory headlines, follow the partnerships, and don't underestimate the ripple effect, pun intended, that this technology could have on your financial world. Now, what do you think? Will Ripple lead the way, or is another breakthrough lurking around the corner? Drop your thoughts in the comments below. If you found this video insightful, hit like, subscribe, and ring that bell for more deep dives into the future of finance. And remember, in an era